Good morning, everyone. It's Trader Rob. Today is Tuesday, April 21st. Let's jump into the NQ chart right away. As we finally had a kind of been in a choppy environment that I'll kind of go over the overnight. But we finally did get this first break here with our first up candle on the 120 range right here. So this would set us up. But obviously right at the market open is not the ideal time to take a trade. Now, the one thing I did like about this is that we did have a key level sitting right at the value area high, so this would have been a pretty nice target for a short. But as we broke structure here, there is nothing to do here as of right now. Did have a signal that I gave to our signal members this morning at the 26,749. Gonna see if I can maybe wait here. It looks like we might tap into this one right away. I would have rather this happened a few more minutes prior to the market open. Some things here to look out. So that was a tap right there. Let's see what occurs here. There was a reaction. We've got some key levels. That was TP1. So key levels here at the 26,841. Another key level that we just tapped into at the 26,775. We are in an unbalanced volume area from buyers here. So that is obviously a natural reaction point for the markets. And this looks like it would have turned out to have been a nice signal there. So that would have been an 11-point winner, 11.5 points. Let's see if it can go up to TP2 or not. I wish that this would have been a little bit later in the morning session, but can't have everything. And then just looking at price action overnight, which I kind of went over this with my signal members here in our pre-session live trading room. You know, there was on the AVT setup, all of this was just kind of pure chop. Yes, it was an uptrend, but this kind of kept you out of some pretty tough trading right here. Okay, pretty damn tough trading there. So the AVT got you really didn't get you any setups there yet from the overnight session. So we'll see here. Let's take this out. I don't think that we ever ended up, let's see, I don't think we did hit TP2. We didn't. We got pretty damn close, but we didn't. Just take a screenshot of this so I can get this up to here. Capture. Okay, let's delete this, delete that. We can delete this guy and this guy. Sorry about that. Let me go to the 2-minute here. All right, we're set up here now. Let's go to the 30. Let's get this guy prepped and ready for the 15-minute opening range. Okay, he's ready. Now we can just stay here on the 120. And we'll see if this closes here as a up green candle. Expand this up here a little bit. As you can see, we've had another leg here down to the downside right here. So I'm just looking to see if this candle closes as an up 120 range footprint candle here. Then I will grab my fixed volume profile tool and capture all of this price action right here and see where our entries sit. And then one thing that I went over with my signal members on this strategy is, you know, if you've got some key levels, you want to be very cognizant of where your key levels are going to be sitting at as far as within the trade here. You do not want to see one of your key levels sitting near a stop loss for you. So that would invalidate a setup for me. Now, if a key level is sitting right smack in the POC or near your entry, awesome. If a key level is sitting near where your TP is going to be, awesome. We just don't want those key levels sitting anywhere near where our stop loss is going to be at, because that would invalidate that as well. Let's see if the market can push through this unbalanced volume band here or not. So far, it's having a hard time getting through here. All right, so we've completed our move there. Now we've got a situation where the risk to reward here doesn't look the best, so we're going to have to work here with our reward. Our take profit's going to come right down here at the value area low. And then what I like to do is I like to just split the difference on the unbalanced volume sitting right up here. So it should be somewhere right around here. So our unbalanced volume is sitting right here. And the only reason why I'm not using the pivot high here is because the risk to reward here would not be very favorable for this trade. Okay, as it currently sits, we'd be targeting 43 points with risking 38 points, so a little bit better than 1-to-1. And again, we wouldn't take an entry here at the point of control because, as you can see, we closed above the point of control, so everything is very logical with the strategy. The only logical entry is going to be at the value area high, which this is, all of this is the value area high sitting right up here. I already know I've got some unbalanced volume sitting right here, so I like to just split the difference and call it a day. Which I can actually maybe reduce this just a tad more. Right around there. 35 points of risk to make 43. And then we'll see if we get into this trade or not. If we continue to the downside, I'll cancel this out and we'll look for the next leg. As far as the ES has been kind of dancing around. It's been dancing around this key level at the 71.60, and we've been kind of hanging around at the 71.51. This is going into some buyer unbalanced volume area, also sitting here at the 71.41 to the 71.21. So we'll take a look and see how the ES handles this situation down here. And then in gold, we've got a few key areas, the 48.54 to the 48.40. So I could see a rejection here. We've got another one sitting up here at the 48.90 to the 48.74. Again, a good place for rejection. And then right below us, we almost tapped into this band here this morning, but we did not. This is sitting at the 47.75 to the 47.56. Again, we should probably see a reaction to the upside from here. And then a big weekly band sitting down here at the 47.07 to the 46.64, with a more detailed long opportunity at the 46.83.2. Let's take a look and see. So if we break through here at the low, I will cancel this order out. Points. again, pretty simple setup. So the rules are pretty simple. What we're looking for is a minimum of 3 120 range footprint candles to the downside. So a minimum of 3. So we had 1, 2, 3, 4. So we want to stay within that 3 to 5 up or down trend. Okay. Which is going to equate to 70 points of price action to probably about 100 to 110 points, depending on how big the move is. But again, the sweet spot is that 3 to 5 down bar. Then we're looking for our one retracement back up. And then once this footprint closes out, which each one of these boxes is 30 points or 120 ticks, all we're looking for is to get our fixed volume profile tool and see where some logical entries could be at. Now this one does not, this one had a negative risk to reward here, because would be entering here. Stop loss by the rules would be at the break of structure, and then obviously our TP is at the value area low or the break of structure to the downside to continue this trend to the downside here. So what I like to do is when I've got a negative risk to reward, I already know that I've got unbalanced volume sitting right here, which is pretty much our value area high. Split that in half, and then that should obviously help your risk to reward on that trade. But again, if we get any much more break to the downside, we'll cancel this order out, and then we'll just be looking for the next leg. Morning, Tiger Trades. Morning. Yes, it is. It is the fixed volume profile tool from NinjaTrader. Todd, good morning. Nordic, Joe, Rob, Michael, William, Keith, Joe, Steve, John, Mo, good morning to all. Now, in a perfect trading environment, I would have rather this candle here obviously have tapped me into this entry right here, which we missed by a few points, maybe 2 or 3 points. We most likely would have been out of that trade already. But since we're sitting down here, we could obviously just retest this unbalanced volume sitting right here. So we're into this trade here now. Let's see if we can capture our first trade of the morning. And again, just to get my risk to reward a little bit better, I split the difference here on the unbalanced volume, which is the value area high sitting right here. You know, if the market wants to test this area, next me out, so be it. We'll look for the next setup. But looking at the slightly bigger picture, not the biggest picture, but you can obviously see that for the morning we have pretty much been in a downtrend here since about 7:30. So all I'm looking for is, I'm not looking for anything huge, but just a continuation of this slightly bigger trend to the downside. Also did like this entry because we also did have a key level sitting right here at the 26,775. So that should helpfully give me some resistance. And again, if it doesn't, if the market wants to rip to the upside, we'll try to capitalize on the next trade to the back up to the upside here. Let's see if it wants to go retest those that unbalanced volume sitting down below. And again, for our TP to get hit, just another little mini break of structure to the downside, and hopefully continue that trend to the downside. Did have high impact news here this morning with retail sales. Those came in a little bit higher than expected, but nothing else really on the morning docket. We got a Fed speaker, I believe at about 1:30 Central Time here this morning, and that's about it. So again, at best here, probably about 23, 24 points of profit. Did get a good question from a viewer. They asked me, said, Rob, I love your AVT strategy. It definitely helps me understand the market and helps me kind of take the guesswork out of where my entries and take profits and exits are. And they asked me, can we just do this on a 120 range candlestick chart without the footprint? I said, absolutely. It's going to work the same exact way. The only difference is that without the volume footprint, there's a lot of clues that are given to you guys here. So, you know, if you get a flip in one of these candles, so a delta flip where you get a red down footprint and you're getting positive delta, that could be a continuation model to the downside. Okay, you want to know that information. So that information will help you out. I use it as ways to reduce my risk. So if I get a strong flip, like let's say that this candle here was now to close as a red footprint and it still have positive delta, that would give me a lot more confidence to maybe reduce my risk down to break even or slightly above that footprint candle, where I could be in a no risk trade at that point. Now that we are coming back into testing this level here again, it's going to lose its some of its power here, so I kind of understand that. So we might get tagged out of this trade now if this level here holds, because it might want to revisit and balance out some of this unbalanced volume sitting right here. But again, my risk is controlled. I am in a positive risk to reward. So if the market again wants to rip and break structure up here, we'll just look for the next leg to the upside, and we'll continue that now new mini trend to the upside. Hopefully that doesn't happen here, but it's always a possibility. And we did get pretty, what did we get here? Oh, we got almost 30 points of profit there. So we were pretty damn close on this initial move to the downside. Now, again, as I stated, I would have rather this trade have entered into the value area high right off of this candle. This would have been really nice. We would most likely would have been right out of this trade already. And again, we did get a nice push here for 30 points, but for the strategy to work long term, you really need to let those risk to reward plays play out for you. Because yesterday I think we took two trades that were both 1 to 1.5. So you know, you take a loser, a small loser, it doesn't affect your overall performance on the strategy long term. And again, like on this, if this closes as a red footprint candle here, which I hope it does, we're still sitting in negative delta here. So nothing that I will do with my stop loss, it'll stay in the exact same spot here. Yeah, Tiger, I truly believe slow and steady on the funded accounts is the way to go. You know, I sometimes question myself, you know, if it just seems like the process takes so much longer. But, you know, for a end game P&L standpoint, you know, if you keep blowing evals and you keep blowing funded accounts and you start adding the activation fees and the costs that come with the funded accounts, you know, it's not fun. So it looks like very similar open to yesterday, where we kind of got stuck back into this range here, but I'm okay so far. This is the retracement where we got into our entry, and we're just looking for a continuation here, hopefully to back down to the downside. This level here, oh shit, I just moved it. I gotta go back and see where that level was at. It was at the 775, so one more down. So it looks like we're getting a little push here to the upside. So far, this level has held, I should say, at the 26,775. But the more we keep busting through here, the more we keep tapping into it, eventually it is going to give up the cookies here. So this would be a great spot here for it to hopefully reverse back down to the downside. But it looks like we're getting a strong push to the upside here now. And truly not because I'm an affiliate with Lucid and I also trade with Lucid. But, you know, I was actually thinking over the weekend, you know, if I was to do this all over again, I would probably concentrate all of my funded accounts in that type of, in those type of trading rules that Lucid, Top Step have. You know, the drawback with Top Step is that I can't trade it off a Ninja, so that's a huge drawback for me, because it's just added things that I have to concentrate on that I don't really feel like I need to do that while I'm trading. But you know, once you get past their, you know, the funded stage with them, it truly is very close to a cash account. I know Take Profit Trader is your most similar to a live cash account, because as you could take payouts every single day. But once you get past that, you know, 5 positive trading days of $150, you know, at that point, like, there's no consistency rule tied into your trading anymore. You can take bigger trades, you can take, you know, smaller trades, you can go at your own pace and just build that account like you would a cash account, and then whack it for 50% of the profits. You know, and just continue to build on that like how you would with a cash account. So I do really like their rules here, and it looks like I am probably going to get tagged out of this trade here. Got to refill my coffee, but I'm going to let's see if this knocks us out right here, which I think it will. All right, so that is our first loser here of the morning, which took us about almost 20 minutes to get through. let's see what our IB looks like. So our 15-minute initial balance is sitting at the 26,826. Don't like the fact that we don't have a lot of room here. We don't have a lot of room here to this key level here. We don't have that 30 points that I kind of need. Like I would say 8 minutes, 8 to 10 minutes after the market opens. That was good risk preservation there too on the stop loss. Well, that doesn't hurt too bad. Let's see if we close here as a green up candle through that 15-minute initial balance. Not yet. All right, we're into this trade here. See if we can get a continuation push here to the upside. Again, I don't like this key. Oh, that was quick. Fuck. It's been really, really choppy up here. All right, so that's another 8-point loser there for the 15-minute initial balance trade. Let's get back into our chart here and let's see what we're working with here. So again, on that 15-minute initial balance trade, it's very simple. We're just looking for a break of, it is a breakout strategy, so we're just looking for a breakout of that 15-minute initial balance. And very, very tight stops, as you guys can see. Had a stop there of 8 points, and I'm targeting 30 points on my TP on every trade. So I did find this little unbalanced volume area here on gold at the 47.96 to the 47.88. Kind of stalking it to see here if we do get any type of flip on the footprint chart here or not. All right, so here on the NQ, we finally did get now. We've got here 1, 2, 3 up 120 range. So this is the new mini trend established. We did break structure up here, which was right here. Now what we're waiting for is our first retracement bar. And again, I'll just pull out the fixed volume profile tool and see where we can take some entries to the long side here. Morning, Arshak. Coach Stokes, good morning. So my entry would be either the point of control or your value area high or low, depending on how the fixed profile tool works out for your entries. Your point of control is typically going to be your entry. It could also be your take profit, depending on which direction we're going in. But as we map out some setups here, I'll show you how it becomes pretty logical. It's really not subjective at all. All right, so again, we've got point of control sitting up here. So that's not going to be an entry for us because we closed below it. Our only entry here is going to be at the 26,802. Stop loss at the 26,756, and we would be targeting the break of structure sitting right up here. And I am going to refill my coffee. I'll be right back. Don't go anywhere. All right, I'm back. And again, what we're really looking for is just that small retracement right back into this unbalanced volume area sitting right here. And looks like we pretty much came to our TP right here. So we'll see if we can, how this candle here closes, but most likely this order here will get canceled out. And we'll continue to look for the next setup here. Got about 21 minutes for initial balance to be set. This makes sense. Where do we find the fixed... well, the fixed volume profile, I don't believe... Oh, it is a... yeah, so that is part of the Market Plus, I believe, or the order flow add-on for NinjaTrader. I believe it is, because it's called... whenever it's got order flow. Yeah, order flow volume profile. Whenever it's got that word order flow right there, that's part of their add-on. Or if you have a lifetime license with NinjaTrader, which is what I do, that is all included. Or I should say it was all included. All right, taking a look at Bookmap here. So we've got some volume sitting here at the 872s. In general, pretty light on the order book right now on the NQ. And taking a look at the ES here. ES has got a good level here at the 7180. And the 7175, 5 points apart. Remember that. And then so we got some liquidity sitting below us at the 7157. We got about 254 contracts sitting right there. So again, just to kind of highlight some of the trades that we took here this morning. So our first setup here was on that initial push to the downside right here. We did go into unbalanced volume that was sitting right here. and we got our setup. So we got 1, 2, 3, 4, 4 down, 120 range bars. So from here to here is probably, well, not probably, it's almost 100 points of price action. So a nice little healthy move to the downside. We then got our first up 120 range candle, which is again 30 points for this box. And from that point, we just put our fixed volume profile tool right here. We did take a short from value area low. This was my unbalanced volume area sitting right here, and we were targeting the break of structure back down to the downside. We did get pretty close to our TP. I think we were about 30 points in profit there, but then the market obviously made a nice little rip here to the upside. We then got our next leg here to the continuation. Again, same setup, 1, 2, 3. The A+ setup is 3 to 5, minimum of 3. 5 is your sweet spot. I would say 3 to 5 is your sweet spot. Anything over that starts becoming more of an overextended move, and the setup starts to lose some of its strength in that scenario. So what I was looking for on this leg was just a small retracement down to the value area low, and to take this for a continuation to the upside. Obviously the market went without me, so at this point this setup here is invalidated, and now we're just waiting here to see if we do get a few more 120 range candles to the upside. The beauty of this strategy is that it will keep you out of some pretty nasty chop. As I explained over the overnight session here, if you stick with the rules, you know, you really avoid all of this garbage price action right here, which is going to be very, very difficult to trade. This is what this price action looks like. And if you can trade that, good, you know, good for you. It's a great quality to have. But what we're looking for is the healthier trend on the short term. This is not a long-term, we're not looking at daily biased or even hourly bias, not in the first hour and a half of the market. These 120 range bars can form 3 or 4 of them in a matter of minutes. So, but as the day continues on in the afternoon, you'll see that it might take you 30 to 40 minutes to create a setup, because price action and volatility has slowed down. Then that becomes a little bit more of a bigger trend. And we're just trying to capture these moves, all really decent risk to rewards. You know, I've already noticed it on my TradeZilla. My risk to reward matrix has increased dramatically. So I really truly do believe it's a really superior way of trading, and it incorporates all of the best theories that we've all been taught. Okay, so there's hundreds of theories on how to trade. You can do this any which way you want. You find an edge, keep going with the edge. But you know, what we've been taught is that the market, let me just kind of bring this down here a little bit. We've been taught very simply that the market very rarely just moves in a straight line to the upside. You know, this is generally what we see in the markets, okay, on a trending day. Okay, so in a scenario like that, how this strategy captures these trades is on these, sorry, I hit my little thing there, so it's kind of an ugly little end of that trend there. What we're looking for is just healthy pullbacks, and then for it to be a true trend or a true break of structure, it's got to break this structure right here. And what we're doing is, instead of going in on a fib level or, you know, some other number, what I'd like to enter in is on the point of control of this move, or the value area low of this move. Okay, what are we doing? We're buying low and we're selling high. Again, another theory that's always been taught. Wait for the retracement. Okay, well, where's the retracement at? Where do we get in on the retracement at? What fib level works the best? Just use volume, and volume will tell you where more than likely the market wants to revisit. And, you know, we continue with this trend. Beautiful. You know, we look for the next setup that appears. If it blows through and stops us out, fine, no problem. Guess what? You just created a new mini trend to the downside. Let's ride it to the downside. So it's and then on the days of range, which we see a lot, this strategy will do extremely well as well. Okay, it captures this type of range very well. What it will do is it will keep you out of the garbage chop, because the garbage chop isn't going to give you 320 range bars at a time. It's not going to give you 100 points in one direction. That's not choppy chop anymore. That's more of a mini trend, one way or the other, that shows that the bulls or the bears have been in control for that leg. So it works really well in range. Now, where this strategy gets hurt, and I've explained this several times, is going to be market environments like this, okay, where in theory, any strategy is going to really have a very hard time trading this type of price action. But you know, you get your leg to the upside. We want to wait for the retracement. So let's say we enter in at the point of control here, and you've got your stop loss sitting down here. Just to see your stop loss get tagged out, we make a sweep, and then we continue all the way to the upside, which is where our initial thought process was of where this leg was going to go, right? Well, it stopped us out before that. Well, now we could say, okay, well, let's take the value area high, stop right here, just to get your stop tagged, and then go to the downside. This is a much rarer market environment. The first two examples is what you see majority of the time, but your losing trades and your losing days will be when this shows up. And unfortunately, what I have found is if you find this once or twice in your setups, and this is the constant theme that's been happening, you're done for the day. You'll wait for the next day and wait for the next better trading environment that doesn't fit that pattern. So like right here, this is not a valid setup because we only had 1, 2 up. Okay, this move right here is probably only let's see, it's about 60 points. Yeah, but it should be around 55 points because each one of these is 30. Okay, so and then we finally got our one down leg right here. This doesn't fit my setup. Don't need to do anything. This might just be now chop. This is what shows you what might be the chop for the next 15 minutes, the next 20 minutes, next hour. And I'm happy avoiding that. As much as I want to take a trade, I would rather wait for the better setup. So Morgan asked a good question. Morgan said, oh, yeah, I'm sorry. First, let me just see if I can answer your first question here. Rob had one he used to use, forgot who sells it. What are we asking about for, you need to have order flow? No, yeah, so the order flow is actually with NinjaTrader. If you attach a prop firm, so anything that's using Trade of 8 prop will give you order flow for NinjaTrader. From what I've been told from other members and traders, I honestly can't verify that because I already have it on my NinjaTrader. but that's what I've been told. And it should, because when I go into Trade on my funded accounts, I can pull up the fixed volume profile tool there. So that handles that. The only problem with Trade on their web platform is that you can't get the footprint chart. But you could trade this off of the regular 120 range. In fact, when I was in DC on chaperoning the 8th grade trip last week, that's what I was using, because not to take any trades, but I was at least taking a look for the setups of the day, just giving Discord and my Signal members what setups had occurred last week. And then I had a question here of, does it need to break structure? Well, the beauty of the strategy is for you to get a 70 to 90 point move. 90% of the time you're going to be breaking structure. So that's kind of built into the strategy already. If you get a super clear break of structure, yes, the setup just becomes that much stronger. But to keep it in a mechanical sense, if you get that 3 or 4 up bar and you've got 100 and 110 points of directional movement, you're more than likely have already broken structure to your left. So it's kind of already built into it. Let me just get the initial balance trade set up here. See if we can take a nice little trade here this morning. That initial balance trade is one of the best setups that we have. So let's see where we're currently sitting at. All right, IB high is sitting at the 26,885, and IB low is sitting in this unbalanced volume area. I was hoping that we could take out with that first trade at the 26,726. So we'll keep an eye on that one. But we got about 6 more minutes for that to actually be set in stone. Okay, and a few more nuances that I shared with you guys yesterday. We're always trying to get to the best A+ setup that we can get to. What I obviously love to see is I love to see 2 levels where I can use as entries above me, because you now have several layers of defense. So, a good setup would be point of control as your first entry, and then your second entry could be the value area high. So that's a great setup right there. One thing else to look for is on your down candles. This is just an example to the downside. So we had some healthy movement here, okay? And you can see by how healthy the movement is, where the box, where the high of that box was at. So the high of the candle, you could see was towards the bottom part of this footprint. Now this next one that we had, yes, we had a down, which is great. But as you can see, this one retraced a little bit more to that halfway part of the footprint. I would like to see it somewhere in the lower 1/3 for it to be an A+ setup. Will I take the setup? Yes, because this is going to still fit my my parameters and my requirements of my trade. But again, I'm trying to give you guys the sense of the best things to look for. And one more thing is, whatever you guys use for your key levels, prior day high, prior day close, prior day open, current day open, high, low, 1 hour highs, swing points, pivots, whatever you guys use for confluence on your levels. What you want to avoid on a trade is that if one of your confluence levels is sitting right by your stop loss, okay? Those are the trades that you want to avoid, because we already know that these key levels will always act as magnets and usually will attract the market to come back and retest one of these levels. Now, if one of these levels is sitting near your take profit, awesome. If it's sitting near one of your entries, awesome. But not near your stop loss. That's what you want to avoid. And you can kind of see the difference here between this move, how kind of healthy this was. This closed at its high. This closed at the top 1/3 of price action there. So you can see how healthy this move was a little bit compared to what you see here. This is a little bit more bunched up, but no big deal. We'll take a look and see. Let's get rid of this. And let's see what we are presented with here. All right, so we've got an entry really close to where we're at. So we come right here, value area high. Your TP is going to be down to the break of structure to the downside, just to get that risk to reward. You also have another target here, if you guys can see. You've got this target right here at the value area low. So this is break of structure, this is value area low. If you want a, this is going to be your easiest target to get to, which is at the 819. I'm targeting the 815. That's if we get into this trade here or not. Seems like we keep missing these retracements by 3 or 4 points on the initial move to our TP. And then looking at, again, all of our setups this morning have been a little wonky with our risk to reward because, well, we're 1-to-1 here, 35 to 35.75. So it's not terrible. But if this was a negative risk to reward, then all you got to really just do is split the difference on your unbalanced volume, which is sitting for me right here. And I would split that difference right here. Don't need to do that because we're still here on a 1-to-1. So again, everything gets really, really logical with the strategy, and doesn't really give you many things to think about, which I'm a fan of. Now again, if we break this here, which is where our TP is at, we cancel this trade and we look for the next setup. And when there's going to be days like that, I think maybe last Monday, I think it was, I missed 3 setups by literally ticks on my trades. So that was a little annoying just to see them all go to TP. That could have been, it was still a green day for me, but it could have been a monster green day. And, the setup that I was talking to you about, which is the one that I love the most, is instead of point of control sitting down here, I would love to see, this being point of control and then this being value area high here, because now you've got 2 levels of defense within this structure here. So we'll see here if we can get a small move to the downside. We're not looking for anything huge. Initial balance is set. So these initial balance, which is really right at our stop loss. Not a big fan of that. But that is sitting at the 26,885 and initial balance low is sitting at the 26,726. And again, your safest target here, which is, again, it's only a difference of about 4 points, is right here at your value area low. Since we don't have a secondary entry, this should be your TP. So saying that, I'm going to move that right here. So in that scenario, we don't even need a break of structure. We just need it to balance out some of this volume down here. And it does bring our risk to reward a little bit negative. I'm not a big fan of that, but again, not huge discrepancy here. It's about 4 points. And more than likely, if you take out the value area low, you're more than likely going to take out this 26,815 because there's obviously going to be some liquidity sitting right down there that the market's going to be attracted to. Taking a look at Bookmap, sorry about that. We do have some resistance here at the 822. So that could be a spot, you know, that's sitting right above where our TP is currently at. So this could be a logical spot too to take some profit here at the 822s. Just to kind of keep that in mind. And again, twice we've been pretty damn close to our TP here, about 4 points off. Again, looking at Bookmap. Keep doing that, sorry about that. The 860s have some pretty good liquidity right here, which would represent on your chart right around here. So about 10 points above our entry. We do have some orders sitting there. And again, this I know could be very frustrating for a lot of people right here. You know, 4 points from target, but you keep moving up your take profits, and you don't move. You're not willing to move your stops. You're eventually going to find yourself in a situation where your risk to reward on your trades are not going to, long term, it's just not the best strategy. The one thing I don't like with this trade, again, and that's just the nature of where this trade occurred. This is the IB high right here. Again, super magnet for price action. So just, you know, there's that unfortunate possibility there. And the fact that we were a few points from take profit there kind of stinks, but we'll see what happens. And the only way I will reduce risk is if I do get a flip of the 120 candle. So if I get a flip anywhere in between my entries, stop loss, TP, and again, my flip is very simple. So it's a, let's see if I can find an example of one. We don't have one right here anywhere, but let's just say that we take this footprint candle here, which obviously closed down. If this was positive delta, then my stop loss would go from here to right here. Okay, and that would reduce my risk on that trade. Yeah, Morgan, initial balance is sitting right here at the 26,885. And then our IB low is sitting at the 26,726 down here in this unbalanced volume area. Morgan, because I like to go break even on, or let's not call it break even. I like to reduce risk on logical things that are happening with the market, with what I see with volume. So if I see a flip in my range candle, meaning that let's just say we get negative, we get a down footprint candle with positive delta. That means that buyers were putting in a lot of effort to try to make this market go up. But even with all of that effort from buyers, the market's still pushed down. That to me is a sign of strength for sellers. That's the only option that I will then reduce my risk down to. Because otherwise, if you keep reducing your risk just based on a move, we go to break even here, we would have already been tagged out again. So even though we were 2 or 3 points out of this move, and you could have been out your 31 points, which I'm not saying this trade's going to be profitable, but the edge is with us on here for it to close out in profit. So everything that I do has got to make some logical sense instead of just having some random formula on how to reduce my risk or how to go to break even. I would rather be in an area that shows strength from sellers or buyers, depending on which direction I'm going. And what I have always found is that the footprint does a very good job of that. That's why I'm saying the footprint candle, so nice TP there. That's why I'm saying that the footprint candle is superior than just using a range bar, because if you're just using a range bar, you don't get these little clues inside of volume. And again, this wasn't a flip here either. You'd have to see positive delta, but regardless, we were able to capture a nice trade there. And I can probably hear some people, in their minds saying, Rob, what is this guy doing? He's, now he's fighting the trend to the upside. So yes, we have a prevailing trend to the upside, okay? But what does the market need to do? As we already discussed, the market doesn't move this way, okay? The market is always going to move like this. This is the money maker pattern. This is what market makers need. I repeat, need for them to be profitable. They are not profitable on moves like this, okay? Where there is no efficiency in the market, they are not profitable. They love this kind of shit. These type of market days is their greatest days of profit, okay? Because they're matching buyers and sellers very, very quickly, very easily, very efficient. So even on prevailing trends to the upside, you're gonna have your pullbacks. And if we can identify a pullback and buy in at a good price and just take it back down to where the smaller trend was already pointing to. We don't need a huge move. I'm not looking, you know, well, some of them are 60 points. Some, I mean, you've seen me take trades 60 points, 75 points, depending on where this is sitting at. Because again, this could be sitting right up here. You could be risking 10 points up here to make 60 points. And I have done this many, many times with this strategy where you get an extremely good risk to reward. And it just doesn't break your structure up here. Because again, it's following market structure. It's following a lot of the basic theories of the markets. And then it'll help you avoid shit like this. Okay, like when we start getting again now into a very choppy market, it'll help you avoid looking for setups. We don't even have to look for anything here. And now the next trade idea that we would have is the initial balance trade, which is going to be sitting right up here, the IB. That is probably my most profitable strategy that I have, and that is strictly looking for flips, exactly what I was showing you guys with on the footprint charts. I use the footprint chart very simple. I really dumb it down. I am not looking for imbalances. I'm not looking for, point of controls inside of these footprints. There's a lot of different ways that you can trade these footprints. I make it very, very simple. I truly, the main reason that I use a footprint is for the exact analogy that I just showed you, where, again, this is gonna, hopefully I don't miss this IB trade by showing you guys this, but I think we should be okay. So when you get your flip, so let's say you've got whatever strategy you have. You know what, I gotta make this so that it doesn't time out on me. So whatever strategy you have, okay, you're gonna have support and resistance, right? In my situation, I've got areas of unbalanced volume. That's what I target. In this scenario with the initial balance, let's say that this is your initial balance right here, this line right here. So what I'm looking for on this particular setup is for our footprint chart, not on the 120. I'm not using it on the 120. I am trading it on the 30 or the 60 range. So I'm going to give you guys some examples of those. But all I'm waiting for is for that 30 or 60 range footprint to tap into the initial balance. And what I'll be looking for is for this to close down as a down candle with positive delta. Okay, what does that mean? That means that the buyers were attempting to get this market to go up, but the sellers were still able to close this footprint red. Okay, what does that show? It just shows that the sellers, even though the buyers were stronger, still managed to close this to the downside. And you will see time after time after time how well these footprint delta flips find the exact point of reversals in the market. And I trade it very simply. I've got three ranges that I use. I use the 120 range, which is my higher time frame. Not time frame. This is not time based. It's the higher range, okay, which is what we use for the AVT strategy. I then use a 60 range, which again is equivalent to 15 points. This one up here is equivalent to 30 points. And then my scalping range is the 30 range, which is equivalent to 7.5 points. Okay. The 120, consider this to be like your hour time frame, your higher time frame moves. Okay. This is not time based, so you cannot use this on a time based chart. You will be completely off. But this is my higher time. This is giving me a little bit more bias into my moves. The 60 range is a great entry confirmation candle. Okay, great entry confirmation candle, because as it's 15 points, it's a great balance of the 120 and the 30. Duh, it's right in the middle of the range. but it gives you a really nice, these 15 points, guys, is there's something about 10 to 12 points in the NQ that's very pivotal and on moves. The 15 range catches these reversals really, really well, and makes your risk to reward not so bad, because again, we are only going to really need to be risking 15 points. Here we typically are risking 30 points. Down here we're typically risking about 8 points, depending on how well your entry is or slippage. My 30 range footprint is my scalping footprint. Okay, that's going to get you into the absolute quickest way into a trade. But it's going to be the lowest probability trade. Okay, because we're only moving 7.5 points. Okay, so it's going to be your lowest, but it's also going to be your best risk to reward. If you can catch a reversal on the 30 range, you can target 20 to 30 points, only risking 7.5. It's a beautiful thing. The 60 range, you're risking 15 points. You can target 20 to 30 points very easily on the 60 range. And then your 120 range is going to be your biggest one. That's your risk of 30 points. Those trades you can look from 30 to 45 to 50 to 60, whatever it is that you're looking for. So these are what I have been using for the last 2 years, or I should say the last year and a half. And I find it the absolute superior way to trade. Another really good example is when you're looking at the candlestick. Let me get rid of this. So I'll give you guys an example. This is my 30 range right here. Okay, so each box is 7.5 points. So what I'm looking for is that once it gets to the initial balance high, again, what I would want to see would be a candle, a footprint candle, breaching this line or tapping into it, closing as a red footprint with positive delta. The more positive delta, the better the flip is going to be to the downside. Okay, but one thing that I'll show you is this also eliminates a lot of noise. So when you get scenarios where you're just stuck in this type of environment here on the candlestick, all of this, that 120 range bar hasn't even closed out yet. So it's just one bar. All of this garbage gets encapsulated into one bar. Okay, which is great. It's just going to take a lot longer for that bar to close out, but it avoids seeing a lot of this noise in your market. Now, if you go down to the 30 range, you're going to see a lot of this noise, okay? Because you're going to have up, down, up, down, up, down. You're just going to see noise. And it's the same thing as if I was to switch now to the 15-minute chart or the 30-minute chart, you would avoid a lot of this noise here as well. So they work similar, but not really. If that's a thing. So let me just put this here so I can see this on all my charts. This guy down here. Perfect. That's exactly what I need. So we'll keep this guy over here, and then we'll just stay on the 120. And let's see if we can identify another setup here. So what do we see? Now we've got a pretty healthy move to the downside, right? Let's just fit. This one's about halfway through, so it's okay. I would have rather seen it down here a little bit. This one looks great. This one's again halfway through, but still, if we close this down, I'll look to see once we get our next up candle for retracement and see if we can, you know, continue this mini trend now to the downside. Give me 1 second, guys. So again, very similar setup as to before, where we're not getting point of control sitting right here. We obviously closed above it, so this is not an entry for us. Our entry would be at this value area high. This is our unbalanced volume area sitting right here. The only thing I really don't like here is that we've got this level sitting right here, which would be pretty damn close to my take profit. I'm sorry, to my stop loss. Let me just see what this would look like really quick. So about 27 points. That's a. Let's see what this would look like here really quick. So if we gotta put this up here, that's 35 points, and we'd be targeting. It's not the greatest risk to reward. This would be where it would have to be at. $35, $32. Again, a little bit of a negative risk to reward on this trade. So let's see if we get pulled into it or not. And it's just how price action's working out. You know, this is how volume is shaking out on these moves. You know, it'd be fantastic for the value area high to be sitting up here, but it's not. You know, that increases our risk to reward really nicely. And, you know, we do have this key level still sitting here, which I think I just moved. Let's take that. Make sure that that one's sitting at the right spot. Yeah, 841. And again, if we break down here, which we kind of already tapped into our TP area here. But if we break through at this break of structure here on this candle or any of this subsequent candles, then we'll cancel this trade out and we'll look for the next setup. Let's see what the ES has been doing. It looks like we are going to be testing this this unbalanced volume here from buyers at the 71.41 to the 71.21. This should be kind of interesting. We've pretty much been hanging around these key levels that I mapped out here at the 71.60 and the 71.51 here this morning. Okay, and why do we not want to take this? So we can cancel this out right now. Okay, why do we not want to take this trade here once we break structure, guys? Because what do we always see in the market on how the markets operate? You know, you get a swing point to the downside, This is obviously a key level as well. What happens here a lot? Market comes in, sweeps it just to head back to the upside, right? We don't want to be a part of that. We want to get into this trade and then be a part of that. That's great. Again, it's another theory in price action that you can jump onto that trade, jump onto that ship. Now, we unfortunately missed entry here again by probably 5 points, which will happen, but that's okay. You know, depending on how price action is happening, you might get 3 or 4 setups, you know, in the morning to lunch session, and it's more than enough. Well, I think it's more than enough. For some people, it might not be. It looks like we might revisit here now the IB, so let's get ready for this guy. So now I'm going to be on the, what I do for the IB, once we're getting close to the IB low, what I do for you guys is I switch here, and now we've got the 60 range right here, which again is a slightly bigger range for me. And then I have on my main screen up here the 30 range, which is my scalping. What I'm really looking for is, again, I'm looking for that flip to happen at the initial balance on the 30. But guess what? Sometimes you don't get it on the 30. You don't get the flip. You get a green candle with positive delta. That's not my entry criteria. And if I don't get it on the 30, then what I do is I switch over to the 60. And maybe the 60 gives me the confirmation that I'm looking for, and I'm in the trade. Sometimes the 30, the 60 doesn't give it to you. Sometimes the 120 gives it to you. Now, yes, it's a much bigger trade, but again, it's going to have a little bit more risk involved to it, but it's going to also be the one that pays you out pretty damn well. Your best target on the initial balance is 15 points. You can typically get more than that. You can typically get 20, sometimes even 30 points. Sometimes the IB low, right smack to this exact 30 range, is the reversal all the way back up to the IB high. Seen that happen many, many times in the market. Okay, so we got the we got no confirmation here on our entry. We are still continuing to the downside here. Now I need to see it break this IB to the upside with a flip. Otherwise, there's no trade. So again, this kind of got you out of a just taking a blind limit order here at the initial balance. Got you out of that trade because there was no confirmation here whatsoever. We did get a flip down here, but that means nothing to me at this point. I need to see the flip at the initial balance where all of that volume was currently sitting at. This is where all of the stops were sitting at for the morning. Okay, not seeing anything on the initial balance trade, so not much that I need to do there. Now what we can look for is, since we have kind of established positioning down here, we did break this unbalanced volume area already. What we could do now is even look for something to fade the market now to the downside off of the initial balance. Or we just avoid the initial balance today. Might not be the setup, which is what it kind of looks like. But now if we go back to the 120, now we've got a pretty strong move to the downside. Again, fits our criteria. We got 1, 2, 3, 4. So it fits between that 3 and 5 range. And now we're waiting for that one uptrend, or that one up candle footprint. And we will again encapsulate that entire setup here and see where our entries could fall. And I will remove this band. So even though the band got broken, it showed a shit ton of support right here. So this is where that band was currently sitting at, and you could see that was probably 100 and something point move to the upside there from that band. Let's get these expanded a little bit so we can see what we're doing. This white line is just indicating the initial balance low. Another thing, guys, to note is tomorrow is going to be Cash Profit Wednesday. So 5% of my total session P&L of my profit is given away to one of the viewers here on YouTube. I've been running this for about 5 or 6 weeks. We've had many, many winners. Everybody gets a nice cash they get cash from me through either whatever they use, either Zelle or Venmo, PayPal. I think I've seen them all already. So that's going to be tomorrow. So tune in for the keyword. All you got to do is type in the keyword in the morning into the chat, into the YouTube chat, and you'll automatically be entered to win. We run that giveaway at 10:45. At 11, Rob, did you get a flip? Yeah, I did see a flip on the 30, but it was the only flip that I saw happened right here. Oh, so you're Eastern time? So yeah, mine is I'm Central time. So this one happened at 10. This was a flip right here. So this was indicative of it. Right here, we got a green footprint candle and negative delta. But why do we not take that trade? Because it's not in our key area. Now, if this was a box, if I had a box drawn here and I got this flip, then yeah, then I would be looking for taking a long. The IB high is a specific level. It's an exact tick of what we're looking for. So I really need that flip to happen at this level, okay? Not below it. Sometimes you can get it above it. So if we get a move like this, we get a small move here and then up, then yeah, sometimes I will take that trade right there. But underneath here, if this is the flip that you're talking about, let me just see if there's any other flip. You got another flip right here that happened, and you're going to see a lot more flips on the 30. Because what did we say? The 30 is going to always be, it's a tighter range. So let me just, got price action here moving pretty quickly here. All right, so now we can see where this next setup would appear. So we'd be looking to, well, we're already kind of continuing to the downside here, so this might not even turn into a setup at all either. But if this was a setup, which I would like to see is a more retracement back to the upside, we would take an entry here at the value area high at the 26,750. Stop would go here at the break of structure. And then you've got two targets here. Your most likely target would be the point of control, which is about a 55-point scalp here. And if you want the full meat and potatoes of the strategy, you would be at the break of structure down here, which would add about, this would be about an 80-point trade down here. From here to here. But as we already broke structure to the downside so quickly, this doesn't look to me like it's going to be a valid setup anymore. So we'll just continue to look. You know, this is kind of 50-50 because this one really closed within this same box right here. These two are pretty equal, very equal. So you can't really say that this is a sweep of liquidity. There's really no liquidity really yet sitting down here, as that this really did not get established as an uptrend here yet. So this to me right now is probably about a C to a C plus type of setup. So something you might want to avoid and just look for the next better setup. one thing to look for here could be a possible continuation fade of this initial balance. I think, again, your best scenario would come from the 60 range now, just to get a little bit better confirmation. So again, what I'd like to see here would be a down footprint candle now that we crossed through it. And right here, I'd want to see this close as a down candle with positive delta, which we might get. So if this closes as a down candle here, I will enter into this trade as a short. And no longer interested in that one. Now, I will say, the one thing that could get me into this trade that would make me, that would give me a little bit more confidence would be as if this closes as a down footprint. We stay with this positive delta, which is my flip. That's my entry confirmation. Then I have controlled risk, because then I can risk the top of this candle, and we've got a huge target down here to go for. So I'd be very willing to put on that type of risk on that trade, as we already broke structure down here, and we already know that this is more leaning to be like a C+ setup here. And this has been a pretty strong move to the upside, which again doesn't scare me that much. This break of structure down here is the one that kind of scares me the most. Good day, Tiger. Casey, I'll take a look at it when I get a moment. So let's take a look, Casey. It doesn't look like we're going to get a flip here yet. So I'll look at that on my other chart. So you said 742 this morning. 742. Right here. 742 would be on this one. Oh no, I'm sorry. 742, not 842. Right here. I would assume somewhere right around here. So you're talking about this one right here? Yeah, I mean that's depending on, you know, what your entry. I'm assuming that you're thinking is this key level right here at the 26,841. This did kind of close right above the level, but close enough. But yeah, this is a decent reversal right here. You know, this is exactly what we're looking for. 117 delta, red footprint. Catch that move to the downside. Again, I think at that time I was more mapping out the setups of these. That's not something that I probably would be trading at 7:42 in the morning, but not saying that it's wrong either. But yeah, that was a valid flip, and you'll see them a lot. They catch the bottoms and tops really well. Here, they didn't. You got a flip here, but we swept it, and then we finally went, which is what I was a little afraid of on just taking this short right here, because we had this break of structure to the downside, and then we quickly reversed up. It usually means a sweep. Granted, I didn't feel like there was a lot of liquidity sitting down here, but I also wasn't looking at my book map at that time. I don't necessarily feel like the swing was really established all that strong, but we might get a flip here. And again, if I get a flip right here to the downside, it's going to be about 30 points of risk here. Let's see if we get a continued push to the downside. Just give it a minute. Actually, this is not a flip. So we had -5 delta, so no entry there whatsoever. Let's see how quickly that shifted there. See what this leg looks like here. Yeah, the market's already shown us that we're not in a trend day. Okay, this is still pretty chop or range bound of a day. So you don't really have to be worried about changing your the market is telling you that you don't really have to be worried about changing your short-term bias here. You don't have to be worried about it. You know, on a straight trend day to the upside, you know, your pullbacks are going to be all going to the upside because that's where the predominant move is on each leg is going to be at. When you get into range, it's okay to flip your bias because that's what range is all about. There is no bias in a range day. Yeah, the overall range, you know, when you look at it from a end of day view, it could be up, it could be down. It's no problem. We're just trying to catch those small movements in between. Well, so far this this band here that I had drawn out this morning, at least it's held, but can't break through from it just yet. So this could be another leg to the downside here. We'll see. Okay, and I think we should all understand that not much for us to do here anymore. We're not taking a long here, as we've already, we got our down candle. So we got a nice sequence here, 1, 2, 3. We got our down candle, fixed volume profile. This would be where the entry was at. What happened on the next candle? We actually moved back to the upside. We broke structure up here. Swept this up here, so not looking to long this back up to here. Looking for your best possible setups throughout the morning. Again, try to keep it as mechanical as humanly possible. right, sorry about that. Chuck Wowshot, I may have missed your answer to my question. Would you be mind answering again, please? On your 120 range chart, what's your interval? How often do you have your volume profile? All right, so super simple. Again, you want to keep it to 3 to 5 bars in one direction, either up or down, doesn't really matter, depending on where the trend's going. So in this scenario, we had 1, 2, 3, and all you're waiting for is, you can have 4, you can have 5 up candles. In this scenario, we didn't. Let's see if I can... Oh, okay. Sorry about that. So we had our 1, 2, 3. Then all you're waiting for is your first down candle in a scenario of going on an uptrend. Okay, you wait for your first down candle. And then that's where you would put your fixed volume profile from this candle here all the way down to this candle right here. Okay, so just pop it right in the middle of this candle, and it'll just take the volume on this leg right here. Okay, that's really sloppy lines, but you got it, bud. We do have something a little interesting here. So this would have been our entry right here. Obviously the setup here turned into a C setup here because of this break of structure right here. But if I was to get a flip right here on the 120, which is my highest range that I have for confirmations of my entry, I don't mind taking this long right back to this break of structure here, the initial break of structure, or even up here, and minimizing my risks just to that flip. Okay, so in this scenario, you'd be 30 points of risk with probably about 45, closer to maybe, yeah, about 45 points to the profit. But again, it would have to be a flip, which right now it's not. If this closes a green candle and this delta stays negative, then that gives me a little bit more confirmation to enter into this C trade that I would normally not enter if we would to get, even if this was to close as a green candle and this have green delta, I'm not even considering this trade here at all. All right, so let's see if we get some. All right, we'll take this little setup here and pop this guy right back. We got 30 points of risk here. And we could just target right here, which is 35 points. And your more aggressive target here would be your break of structure here back to the upside, which would be sitting right around here. That would give you another probably 10 more points, make this into about a 45-point trade. Got it, Morgan. Have a good day. Okay, we got pretty close here. Not close enough, but close. I want to say probably 19 points in profit, 20 points in profit. Right back to our entry here. So now it looks like sellers are putting back a fight here. And you can see we got positive delta. If this closes as a red footprint candle, that's a pretty bad sign for me. In most instances, if this can close here, if this was to close as another flip in the downside, we've got a lot of indecision here, and that would be a good place for you to close your trade out for a small loss. I like to see this as points. All right, so I'm going to close that one out there. That took about a 15-point loss there. But we got the flip in the opposite direction here again, so I didn't see any continued strength there. I already knew that this was a C setup, so I'd be willing to make this risk on this candle, which we almost got. We almost got to our TP there. But now that we got this conflicting flip right afterwards, that to me just seems very, very rangy. And most likely my stop would have gotten hit there for a 30-point loss. So I'm okay with that little risk there. I am on the 120 range footprint, so this is not time-based. When I'm on my candles, these are all 2-minute candles. That's one I typically like to look at. But one of my trading is based off of the 30, 60, and 120 range footprint chart. And overall, you know, kind of a tougher day to trade here today. So I think for the day I might call it and see maybe if I get any other setups here in the early or late part of the morning. Get some lunch and then see what happens on the chart. But overall, a decent day of trading. Not terrible. Could have been better. We're not in the green today, but that's had a really fantastic green day yesterday, so I'm okay. I think we managed our risk pretty well on all of our trades here today. We avoided some setups that just didn't seem to fit, and you can see now when I call it a C setup, where the troubles might come from those setups there. But overall, I think it was a decent day of trading, even though it was in the red. Had fun with you guys. I think I explained the strategy pretty well. And I'll see you guys all tomorrow for Cash Profit Wednesday. Remember to log in, start the stream at the market open. I'll have a keyword there for you. Just type the keyword into the chat. And at 10:45, I will pick a winner for 5% of all my session profits from tomorrow's session. So could be $25 cash that you get, could be $150 in cash you get. Who knows? The better I do, the better you guys do. So you guys can root me on. All right, guys, have a great day, and I will see you guys tomorrow.